Let's clear up the biggest myth about credit cards, the grace period. Many people think it's a mysterious or complicated concept, but it's actually quite simple once you break it down. The grace period is the window of time between your statement closing date and your payment due date. During this period, you can pay off your balance without paying any interest. Think of it as a short-term, interest-free loan from your credit card company. But there's a catch. You only get this benefit if you pay your bill in full by the due date. If you miss that full payment, even by a small amount, your grace period vanishes instantly. There's no second chance until you pay off your entire balance. From that point on, every new purchase you make starts racking up interest charges immediately. There's no buffer, no mercy, and no more free ride. Most people lose their grace period by paying less than the full statement balance, mistakenly believing that making the minimum payment is enough. But it's not. The minimum payment only keeps your account in good standing. It doesn't protect you from interest. Once you lose your grace period, every swipe of your card costs you extra in interest, making your purchases more expensive than you realize. The only way to keep your grace period is to always pay your statement balance in full, every single month, without exception. This simple habit saves you money and stress. That's how you use credit cards for convenience, build your credit score, and earn rewards, without ever paying a cent in interest. It's the smart way to manage your money. But if you slip up, even once, you'll find yourself paying the bank extra for every purchase you make, and those costs can add up fast. Know the rule, play it right, and the grace period becomes your best financial friend, helping you stay ahead and in control. Ignore it, and it'll cost you. Big time. So, respect your grace period, and let it work for you, not against you. Here's where a lot of people get tripped up: understanding the difference between your statement balance and your current balance. It's a common source of confusion, but knowing the distinction can save you money and stress. The statement balance is the total amount you owed when your last billing cycle officially closed. Think of it as a snapshot of your debt at the end of that period. That's the number you need to pay in full to avoid paying any interest charges. Now, what about the current balance? The current balance is your statement balance plus any new purchases, payments, or fees that have posted since the cycle closed. It's a running total that changes as you use your card. Here's the key. You don't need to pay the current balance to keep your grace period and avoid interest, just the statement balance by the due date. For example, let's say your statement closes at $800. After that, you spend another $150 on your card before the next statement. Only the $800 from your last statement is due now to avoid interest. The new $150 isn't due yet. That $150 will roll onto your next statement and become due the following month. Mixing up these numbers can lead people to pay only the minimum, rack up interest, or feel overwhelmed by what they owe. So, focus on the statement balance. That's your real target each month. Make it a habit to pay it in full, on time, every single time. Don't stress about the current balance until it becomes your next statement balance. That's the secret to staying interest-free and in control of your credit card. Don't let confusion cost you money or peace of mind. It really is that simple. The minimum payment is a trap. Pay only the minimum, and you lose your grace period. Plus, most of your payment just covers interest, not your actual debt. That's why credit card debt can last for years, even decades. Example: on a $3,000 balance at 18% interest, a $90 minimum payment might only cut your debt by $45 a month. The rest? Straight to the bank. Your statement shows how long it'll take to pay off if you stick to the minimum. It's shocking. Minimum payment means maximum cost. The only way to win: pay the statement balance in full. Paying the minimum keeps you in debt and makes the bank rich. Don't fall for it. Pay in full, every time. Carry a balance, and your credit card becomes a high-interest loan, compounded daily. Lose your grace period, and interest starts on every new purchase the moment you make it. Buy a coffee, fill your tank, interest starts ticking that day. Credit card APRs are sky-high, 18%, 22%, even 30%. That's way more than a car loan or mortgage. Carrying a balance is like paying a 20% tax on your life. Daily compounding means your debt snowballs fast. It's not normal to carry a balance. It's a financial emergency. The only way out? Pay your balance down to zero. Get your grace period back and stop the daily drain. Don't play the interest game. You can't win. Pay it off and stay free. Ready to win with your credit cards? Start by automating your payments. It's one of the smartest moves you can make to stay in control of your finances and avoid costly mistakes. Set up autopay for the full statement balance, not just the minimum payment. This ensures you're always paying off what you owe, not just a small portion, and helps you avoid interest charges. This one simple move keeps you interest-free as long as you have the funds in your account. For extra security, add a backup payment method in case your primary account runs low. Set a reminder a few days before your due date to double-check your payment and your bank balance. This gives you time to fix any issues before they become problems. Avoid overdraft fees and missed payments by staying proactive. If you ever lose your grace period and get hit with interest, don't panic. Pay your full statement balance as soon as possible. Some issuers will restore your grace period the next cycle, while others may take 2 cycles. Acting quickly helps you get back on track. Always check your card's rules to be sure how your issuer handles grace periods and payments. Knowing the details can save you money and stress. The real credit card win isn't about chasing rewards or points. It's about mastering the basics and building strong financial habits that last. Always know your statement balance and your due date. These 2 numbers are the key to staying ahead and avoiding surprises. Pay in full, on time, every time. This simple routine keeps your credit score healthy and your wallet happy. Automate your payments, set reminders, and stay in control of your money. These habits make managing credit cards almost effortless. That's how you make credit cards work for you, not the other way around. Stay smart, stay organized, and enjoy the benefits. Approved.